We've heard a lot about the energy transition just today, what's happening in Queensland and also what's happening in Victoria. It comes as we have had high prices in recent months and forecasts of that to continue and go even higher. Joining me live is Australian Energy Regulator spokesman Justin Oliver. Thanks very much for your time. I guess just first of all, we have seen very high prices recently. What would you describe as the main factors right now for high prices for consumers?
If you go back to June, we really faced a perfect storm of circumstances. We had bad weather, which meant an early and colder winter. It affected solar output, it affected coal supply. There were plant outages higher than usual. And then there were also obviously international factors leading to higher coal prices and higher gas prices as well. That put the system under a lot of stress back in June. Some of those factors have eased. We've seen plant returning to service. We've also obviously seen improvement in weather and supply issues, but we still do have fairly high coal and gas prices, and that's really driving higher wholesale energy costs, certainly higher than what we've been used to in the past.
Yeah, so higher, so some of those factors are there. Can you step out, if we strip out just the short-term fluctuations, because they're very hard to predict. I mean, what's going to happen with the war in Ukraine and coal? I get that's hard to predict. But if we sort of have a situation as close to normal as possible in Australia, where are prices going to go from here into the near term and then longer term? Because a lot of talk around the energy transition is ultimately it could be cheaper, but what about the cost to pay for more transition, for more backup power as well?
In the short term, there will be costs. So realistically, in the short to medium term, prices are more likely to go up than go down. And that's due to a combination of factors. A big part of that is that network investment that will be needed to make the energy transition a reality. There'll be a lot of that. And that's happening at a time of growing inflation, which puts upward pressure on those costs, as well as rising interest rates. And that increases network costs as well. So we would see that putting upward pressure on prices for the next few years potentially. And then in relation to wholesale costs, part of it is those external factors around fuel that we can't control. But as we do see more renewable energy come into the grid, as we see more battery storage and we reduce our reliance on that thermal generation, we do expect to see those costs start to come down as well. But in the short term, there's going to be upward pressure on prices.
And when we say short, medium, long, what are we talking about here? I'm not going to hold you to this. It's just a very ballpark figure. When do you think costs will peak in Australia? How much higher are we talking about compared to costs right now?
Well, compared to where they are right now, it's very hard to say. Coal and gas prices are predicted to stay high for a few years, certainly through 2023 and 2024. So we anticipate reasonably high wholesale costs for the next few years. Beyond that, it's really difficult to say. And again, how high is really the question. That's about 30 to 40% of the average bill, that wholesale energy cost. So obviously a very big increase there does flow through to customers pretty quickly. But exactly how high, it's really difficult to say at the moment because it does fluctuate quite heavily from month to month.
Okay, if we strip that out then, the rest of the system that we can better predict, that does go to sort of investment in poles and wires, investment in backup systems as well to firm up renewables. When will those costs peak and how much more are we talking about on people's bills?
Well, we do need to see very significant investment in those assets, in renewable generation and in storage and deep storage as well. That's really the principal need, as well as the network investment that's needed to move that energy around. The good news is once that investment is in place, renewable energy, the marginal cost of creating renewable energy is extremely low. People talk about a network powered by free electrons, essentially. It won't always just be renewable energy. There's going to be a role for gas for a long period of time, and that gas may be hydrogen, but that will come at a cost as well. But that will really be there to cover levels of peak demand. Once most of our electricity is supplied from renewable resources, we anticipate actually the wholesale cost will be significantly lower than where it is now.
When will that be though? Because as you alluded to, there are some years that it'll be tougher for consumers. So what's your best estimate for when the benefits actually start to flow in a net sense from that?
Well, the benefits are starting to flow now. They flow all the time, but they're gradual. I can't really put a time frame in terms of the number of years until we get to the position we want to be in. But it's going to be measured in years. We talked about, we've had the news from AGL today. They're talking about the closure of a plant in a bit over a decade, and they're going to undertake significant investment between now and then. That's a pretty realistic timeframe for that kind of transition. The Queensland Government are talking in similar sorts of timeframes in their energy plan that they announced yesterday. So we're talking about a plan over at least a decade, probably longer. The benefits will come through, but they'll come through gradually over that period of time.
Okay, so the crossover point might be difficult, but quite a few years, it sounds like. What about the Queensland plan of basically exiting coal, Loy Yang A closing, which is set to be the same year? This news today, does this get you back to the drawing board and figuring out how the system copes, whether you need to sort of smooth out these closures a bit and talk to the two states? Does this worry you at all?
No, I think this is really the work that's being undertaken right now to plan for the eventual closure of thermal generation. The other report that came out today was by the Energy Security Board, and that's a board consisting of all the market bodies that regulate and operate the electricity system. And that called for massive investment in physical assets as well as regulatory reform, and said that needed to be done urgently, precisely to make sure we're ready for the planned closure and potentially unplanned closure of thermal generation. And that's also a very high priority for energy ministers. When they last met, they made that one of their key issues that they're working on together with the Energy Security Board. So this is a known problem. The Queensland plan around the scheduled closure of their coal plants is all subject to making sure that there's sufficient renewable and firmed generation in place to replace that capacity when it goes.
Yeah, I guess, and what you're alluding to there is that they're not locked in dates, they're estimates at this stage. Justin Oliver, thanks for your time.